Trade Talks, I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Monday afternoon, we have Chris Dearborn, Managing Director on Nasdaq's Market Intelligence Desk. Chris, it's great to have you with us as always. And let's take a fresh look at some of the technical levels you're reviewing.
The Nasdaq Composite held up relatively well despite the 2.8% sell-off on Friday following all the news coming out of DC and the non-farm payroll report kind of being blasé. We still eked out a gain of almost 1% for the week, which is really setting up for a nice technical pattern here with the Nasdaq-100. Now, if you look at the first chart, you can see that we found significant support along the 50-day moving average, which sits at about 11,305. This morning, we're trading significantly higher, and this afternoon, even higher above where we opened. So we opened this morning right at 11,345. It tested the support area and then bounced significantly. We're trading almost 150 points above that level right now, which is significant because if you look at the Fibonacci retracements, we're still trading at that 76 retracement level, which is telling us that we're still in a very bullish pattern within the index. If you go back a month ago when we were talking, we hit the highs of 12,439, and with that, the relative strength index, or RSI, was well above 70. That's a significant overbought condition. Now, with the sell-off that proceeded over those next 3 days in the beginning of September, we saw almost a 9% retracement level coming back down, and the index did penetrate the 76 level on the Fibonacci downside, and that 50-day simple moving average, which is near term for entry and exit level for a lot of the day traders and retail investors, was moving from a support area to a resistance area. And we finally broken through that last week, and the first test of that held on Friday, held again today, and now we're bouncing off that level. So it's about 9% between where we are right now to the all-time highs. Granted, we have a lot of news coming up over the next couple of weeks, especially with the election, the coronavirus, a lot of economic items, more importantly, the fiscal stimulus package that's hopefully coming through here. And when you look at that, those are all catalysts that can move this index significantly higher. A lot of one-off stock items can move it as well, but we don't have as much in the top 10 names that carry the majority of the index weight expected to come out for the next couple of weeks. So with that, you're looking at the technicals as an entry and exit level. The range right now is 11,350, 1,200. A move above or below would signify a significant move. Granted, it's a 500 points away from the 12,000 level. But once you start moving here, remember, baby steps up, big drafts down. You can look at the chart over the last couple of weeks, see that is true. You can put it on a weekly basis, see it even more so. But on the daily, we're looking good here today. Look for it to hold 11,450 on a pullback coming into the close. And for tomorrow, depending on what the news is, hold this area within 100 points will signify that this move is still moving north.
Yep, stairs up, elevator down. Certainly an old adage on the trading desk for us. So Chris, quickly, if we take a look at some of the individual constituents, where are you seeing the outperformance?
It's in the same names as it always has been. Apple, Amazon, Microsoft, Tesla are all up there. What's nice to see NVIDIA up today, almost 4+%, adding 13 points to the index. What's interesting is that you don't have a lot of laggards. The laggards are really trading flat, less than 1% down. Booking, Monster, Pepsi, a lot of the staples and consumer names are the ones that are getting hurt a little bit here today. But again, that's just waiting for the stimulus package to come through. I don't think there's any significant downside move to any of the members of the Nasdaq-100 that are going to weigh this index down for the next hour of the trading day. What you see here is outside move. Again, the path of least resistance currently is higher. So this is a very bullish looking chart with leadership being taken by the higher weighted membership.
All right, and Chris, before we let you go here, so in addition to the election, COVID-19, of course, and then we have, the development with the White House running rampant with COVID-19. We're also going to the thick of earnings season, right? So we have that to add into the mix as well. Your desk speaks with the thousands of listed NASDAQ companies day in and day out. You're talking to other trading desks as well. Is there any sense in terms of how Q3 could play out specifically, around fundamentals, not necessarily the other outliers?
Right. So there are a couple of interesting names in the index that are going to report this week. You have NVIDIA, Cisco, Paychex, all possible movers of the index. Again, with their weightings, it's a little bit insignificant compared to the other larger guys. Cisco, not so much, NVIDIA, but it's nice to see them come out this week. Need to see what they have to say. The question is on the consumer level. And most of remember, the U.S. economy is 2/3 consumer spend. A lot of these companies are, even though they're tech companies, are consumer front facing. How is that spend going to happen? Microsoft got a good bounce the other day with the console coming out, the games coming through. What you're looking for here is how well is the consumer adapting to this new normal. As our colleague Will says, we're in week 28 of lockdown from home. And with that, you want to see is, when are we returning here? Is the COVID outbreak going to spike like many people think it should here in the fall through the winter? And how is that going to impact jobs? Look for companies for guidance moving forward to start to reintroduce, and they have already. If the dividends were suspended, put them back in place. If the buybacks were suspended, put them back into place. People are looking forward to next year. 2020 is essentially a lost year for most companies, despite the rebound from the COVID lows. But what you're looking for is what their prospects are going to be. Guidance is the key here, and look for an uptick in that.
You know what my concern is, though? Certainly 2020 was the year for companies to focus on continuity, to focus on keeping their employees employed. It's at some point, especially as we evolve into a more hybrid, perhaps work from home all the time role, businesses are going to have to right size. They're going to have to return to profitability. And the big cost there is employees, right? So my concern is if you start to see layoffs as a result of that, and these are the high earning salary jobs, on top of an already, a tough employment picture as it is,
right?
That's really what my concern is.
Well, the unemployment number has been relatively stable. New claims, continuing claims, they're starting to tick down a little bit. The question is, how you're going to go, as you said, pay your employees moving forward. The stimulus bill, depending on which form eventually comes out, will help certain sectors. Airlines is one of them. They're looking to bail out again with that, but that's just a short stopgate. What you need is business to continue. Travel is going to be the problem. And with travel comes a broader array of issues, from hotels to airlines to restaurants and everything on that consumer space, which makes up so much of the U.S. GDP. Now, you can't really look forward there until you get a good grasp of what it is. Companies try to deal with this as best they could from what they have. And a lot of companies are still doing very well from a cash flow perspective. Apple is very well. Amazon's broken through the door, here with the home deliveries. And with that, what you're looking at is which ones are going to be the laggards and which ones are going to be moving forward. Unfortunately for us in the Nasdaq-100 index, the tail end of the index, a lot of that is those consumer names that are being hurt a little bit. Their weighting within the index is relatively minuscule compared to the top 10 names, more so the top 5. So the index, as long as the top 5 are still producing, the index will continue to move higher, despite what the broader economy is pain threshold is. And that's going to be an issue. Remember, when companies downsize a little bit, through whether furloughs as they are now or layoffs, that's generally received as a positive for the company from the cash flow. Now, the greater human impact is a lot worse than that. But from a corporate standpoint, reduced jobs and consolidation is a better use of money being put towards less people doing more, or whether it's AI, whatever the case may be there. That's kind of where that is. If the stimulus bill gets passed, look for this can to be kicked down the road. And you're seeing job layoffs across a number of different companies, Goldman Sachs and a few others in the business over the last week. American Airlines going to announce maybe that'll get stayed with the stimulus package. But what you're looking for there is which way is the stress level going to happen? Is it going to happen on the government level, cutting more checks and printing more money, or will the companies start to be able to pull themselves out on? Until there's a handle on the virus, the spread of the virus, and a potential for a vaccine for those who are willing to take it, or at least containment of the spread, there's a real unknown there. And that's going to continue to happen. Can we fall from these levels? Absolutely. The index, the Nasdaq index here, the 100, can drop to 10,270 in a heartbeat if this scenario gets a lot worse. Now, that still pulls for a bullish sentiment for the index, but not as bullish as we had. It's more consolidation phase that you'd be entering there. And that's never really good for investors. You're looking for buying growth, and that's why you buy this index in the top end of the management, the head of this index. So it's a real question of what's going to happen next. Will a presidential regime change make a difference here? Potentially, but not in the near term for the companies, because the business line still hasn't changed.
Right,
Don't
right.
have
And
people
Chris,
spending.
I would agree with you there. And to wrap up, and this is where I think I would even call it work from home. I think you'd call it the work
Mm,
from anywhere
yeah,
kind of trade, because I don't think this is going to go away. Look at how many IPOs your desk brought to
right.
market in September, right? 40 plus, or whatever the number was. Um, they did all of their roadshows virtually for the 99% of it virtual, right? So
Hmm.
people are learning how to do things more cost effective, more efficient, and they're still bringing companies to market. Think of all that air travel, hotel stays, service industry that did not get that revenue. And I'll tell you what, I have a feeling, even from a carbon footprint perspective, companies are not going to be as willing to go back on the road. I think it will continue to be some kind of hybrid model. So it's great from the work from anywhere stocks, but corporate travel is such a big part to the airlines, and to the hotel and service industry. I think, regardless if you get bailouts or not, or how long you kick the can down the road, um, there's been a seismic shift in consumer and corporate behavior.
Business will still take place, and
Hmm.
people who want to make business happen will find a way to make it work. We always have, we always will. Look at the evolution of our business here over the last 25 years and how that's changed dramatically. Yet people still come in and stocks still trade. So how corporations deal with that moving forward is a big if. And the if there is, how can they sustain the level of growth that they've seen, and how will they make that level of growth become growth further in a COVID environment? And that's what we wait to see. Will a vaccine help that out? Maybe, and it should. But the question is, will companies come back to the travel part of it? Will they come back to the services industry, as you said? And the question is, people will. There's going to be a pent up frustration level of non face to face meetings for people. That's where a lot of business gets done. And granted, with the Zoom calls or the regular telephone calls or what have you, it is helping fill the gap. It's not a stopgate. A blend of the middle. I think we've
Glenn.
swung so far to one side that's going to come back, snap back, and then it's going to right size itself. Will it be like this forever? No. We'll be somewhere in the mixture of face to face and online. I think that's where we're going. It's not a true Star Trek type of environment where you can just talk to somebody and have a hologram there. That's interesting thought process moving forward, but we're not there. Face to face is where it's done. You want to see that person across the room. If you're a
Hmm.
buy side analyst or a sell side analyst, you want to see that management team and how they react to questions. You want to see that body language, and that'll help make your decision. I think there's a lack there, but that'll come back in.
Yeah, I agree with you. It certainly will be a hybrid. Chris, thanks for all the insight and for joining
Thanks,
us on
Jill.
Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.